PayPal stock. Today is the big day, folks. The day I share with you my ultra bearish case, my bearish case, my base case, bull case, and ultra bullish case in regards to PayPal. We're going to go through my revenue projections, my net income projections, where I expect the stock to go over the next several years, all the way out to 2027 in this one here today. I hope you guys really enjoy this. Last night on the channel, I released a video, Palantir, going through my Palantir projections. And I asked you guys, I said, hey, if you guys are interested in seeing PayPal numbers, let me know. And my gosh, did I get a ridiculous amount of comments. Like, top comment had like 118 likes. Definitely would love to see PayPal. I had left a comment, let me know if you guys want to see PayPal or Meta projections. Yeah. Oh my gosh. I mean, the amount of comments I got about, wanting to see these PayPal numbers was a large amount. And so that's what we're going to go through. If you guys are ever interested in Tesla or Meta, let me know in the comment section. We'll see. Okay, maybe I could put that together. But I'm really looking forward to getting into this one here today. Obviously, PayPal, very divisive stock right now. It's a stock that's very talked about. And you know what? There's something going on with PayPal stock that you almost never, ever see in the stock market. And it honestly could be years before we ever see this phenomenon again, okay? And I think I've only seen this happen one time probably in the last few years. What this phenomenon is that's going on in PayPal stock right now is you have growth investors and value investors coming together to buy a stock right now. This never happens, hardly ever. Usually, growth stocks are in their own category, and it's just growth investors in those, or value stocks, and it's just value players in that. Right now, I'm watching people be interested in PayPal stock and buying the stock. They're the same type of people that would usually buy stocks like Tesla, stocks like Palantir. On the flip side, I'm seeing people that would usually buy sleepy stocks like Intel and Microsoft and Apple also simultaneously buying PayPal stock right now. So this is a phenomenon you hardly ever see. I think we saw this a little bit last year with Meta stock, kind of around Q4 of 2022 and the back half of 2022 in general. But I'm telling you, this rarely happens where growth investors and value investors all come together simultaneously and say, we're buying this one together and we're holding this one over the next few years. So, wow, interesting phenomenon, folks. And that's what we got going on here in regards to PayPal. I want to share a few important things with you guys, okay? So this was something interesting. Somebody posted this inside the PayPal Discord chat inside my private group, right? Which, if you're interested in applying and join my private group, check out the description area as an application down there. But it's interesting. Somebody posted this in there on kind of PayPal over the last few years. And, the up cycle was tremendous in regards to stock. And for the past 2 years, it's just been nothing but down, 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 right? And then they kind of put, maximum financial opportunity down here. And yeah, if you had been riding the PayPal train the whole way, I mean, it's been vicious, right? Yeah, you're kind of in that depression phase in regards to PayPal. I mean, this stock was $300+ at peak. Today it trades less than $60. That's extraordinary to see that sort of move. Somebody also posted this. I thought this was great. I'm just kind of showing PayPal in how perfect it is in terms of just a play on consumers and merchants all at the same time and kind of going over their different businesses. I mean, it's just phenomenal. I mean, it's just such a freaking slam dunk. It's not even funny. This is a great one I saw. Said, are we looking at the same PayPal? It's incredible. It's actually one of the most consistent companies you'll find in the stock market. That's incredible, just to be quite frank. I mean, look at the consistency from this company. There's no ups and downs in terms of stock price. There's certainly some huge ups and downs. But in terms of the revenue for this company, in terms of their bottom line EPS and net income, I mean, it's incredible, folks. It's one of the most consistent companies you'll ever find in the stock market. And that's just one of many reasons value investors are finding this stock very attractive right now, because they're looking at this is one of the most consistent business models you'll ever find. And it's trading at a forward P of 10. Okay, give me the free money. Okay, that's what people are saying in regards to this one, right? Now, PayPal's, I got it up to the 5th biggest position in the public count. I continue to add shares of PayPal. And I'm going to probably continue to add shares of PayPal to for at least the next 6 months or so. In terms of the public count, if you're wondering how many shares will I ultimately end up holding in the public count, I think between minimum 2,000 shares, I think potential of 3,000 shares in the public counting in regards to PayPal, okay? And I mean, Yeah, we're down about $13,000 on PayPal stock so far versus Meta. We're up almost $300,000. Tesla on these current shares were up over $300,000. Remember, I took most of my Tesla profits, obviously, a couple years ago. Amazon, we're up $27,000. Elf on a Shelf, we're up $110,000. Palantir, we're up $30,000. And then you got PayPal there, $13,000 loss. So it made me think of the three dragon meme, right? You guys, I'm sure, have seen this before, and I just kind of made my own little one here. Okay, this is my little three dragon meme here, right? You got Tesla, Elf, and Meta here. You got Amazon and Palantir, and there's PayPal. It's just like, oh man, it's ridiculous, right? But it is what it is. Where we're going through what we got to go through in regards to PayPal. I look at it as just stealing money right now, but that's fine. We'll see how things play out over the next 3 to 5 years. Now, before we get into the bearish, bullish, and on all those sorts of cases in regards to this one, it's important you just remember this market capitalization. Basically, PayPal's trading at about a $66 billion market cap right now. So just for all these projections, when it comes to market cap, just remember that $66 billion number right there, because that's going to kind of show you what I believe the upside or downside is for PayPal stock over the next few years. So without further ado, folks, let's go ahead and get into this. And by the way, let me know in the comment section if you believe my, let's call it, theses here. Let me know if you think they're too conservative or too aggressive. I'd love to hear from you guys in the comment section, okay? Alrighty, my ultra bearish case for PayPal. We'll start it out at the worst case scenario, and then we'll just move it up from there, and things will just get better and better, okay? All right, let me take a deep breath. This is really bearish, okay? So in my ultra bearish case for PayPal, I have things going very bad for them. PayPal is a company that I think people expect to grow revenues anywhere between 7 and maybe 11%, 7 and 11% over the next, several years to go in the future, right? Some people have it obviously stronger growth than 11%, but 7 to 11% I think is kind of the expectation. So if the company only did 1% on average revenue growth for the next several years, that would be horrible, absolutely horrible for the company, right? So that's my ultra bearish case, is that literally they grow 1% on average for the next several years. It's almost laughable, right? Ultra bear case assumes PayPal, Venmo, and Braintree are near stagnant next several years. Ultra bear case assumes company will never have any new game-changing products or services. Ultra bear case assumes economy will be weaker basically all these years throughout it, right? Now, in terms of net income numbers, I have them only growing net income 2% on average a year for the next several years. Once again, that would be a complete disaster. Net income growth assumes inflationary pressures will not hurt the company. Net income growth assumes PayPal will not find small cost savings in business, and they're also not going to remain very disciplined around spending. PayPal has shown it can grow EPS at a faster clip than obviously revenues. It's a pretty considerable amount too, right? Ultra bear case assumes AI will not have a positive impact on the business in future years. So yeah, this is a very bearish scenario, obviously, right? You can read through these lines. If I read through all this, obviously these are the same kind of lines you'll see on all my projections and whatnot. Now, in 2027, assuming this is the situation, pretty ugly, right? Because if this is the sort of growth rates PayPal puts up 1% top line on average and 2% bottom line on average, you'll be somewhere in the 10 to 20 PE range, probably closer to a 10, which would put the market capitalization at about a $43 billion market cap. We're at about a $66 billion market cap, so basically that would mean I hold this stock for the next several years and ultimately just to lose money, right? Yeah, that's ultra bearish. If you want to slap a 20 PE on it, because you could say, well, the company, at least was growing, still $86 billion market cap. I mean, that's not very good return for the next several years, obviously, right? So this is a super bearish scenario. I don't see that being very realistic. I mean, whenever I run these projections, the ultra bearish case and the ultra bullish case are usually not very realistic. The bearish case, base case, and bull case are the more realistic ones in my personal opinion, okay? With that being said, let's go ahead and get into my bear case in regards to PayPal. This is a much more realistic bear case, in my opinion, than obviously this disaster of a situation here, okay? So, in regards to my bear case here, This would be pretty dang bad, okay? I have them only growing revenue on average 4% a year. Once again, I think almost everybody expects between 7 and 11% revenue growth per year for the next many years. So 4% would be significantly below that, basically about half of what people are expecting. Net income growth would be about 8%, which is a very low number. We know, obviously, PayPal's should be able to put up much stronger number than 8%, but it's a bear scenario, right? Bear case assumes PayPal continues to put up slower growth numbers for PayPal, Venmo, and Braintree. Bear case assumes a company never has any new game-changing services and products. Remember, PayPal's working on a bunch of new services and products and ways to help their current business and things like that. This is, the bear case is basically assuming they don't have anything material come out for years to go in the future, right? Bear case assumes the economy will be weaker in 23 through 24 with a stronger economy in 25 through 27. Net income, now, so basically I have them getting to about $35 billion of revenue in 2027 and about $5.4 billion of net income in 2027. Net income growth assumes inflation will not be really an issue. Net income growth assumes PayPal will continue to find small cost savings in business while remaining disciplined with spending. PayPal has shown that it can grow EPS faster than revenue. Bear case assumes AI will not have a positive impact on the business in future years. So my bear case still is basically saying AI is not going to help us, okay? Now, in regards to this one, I mean, if you're growing top line 4% on average, you're growing bottom line at, let's say, 8%, you're going to likely command between a 20 and 30 PE. So let's put it closer to a 20. We're sitting at about $108 billion market cap, sitting at a 20 PE, which I think is very fair if you're growing at 4 to 8% top line, bottom line. Sitting at a $66 billion market cap for a bear case, and this is why a PayPal attracts me so heavily right now, because this is my bear case, right? If we're talking about my bear case still assumes, let's call it a little less than a double up. Let's call it an 80%-ish type return. On a bear case scenario, that's pretty attractive to me. That's where the risk reward for PayPal is pretty dang crazy. And remember, we're about to go through my base case, bull case, and ultra bull case. So for this reason, I find PayPal extremely, extremely attractive. Now, the net income margin only has them getting to about 15.5% net income margin, which for a company like PayPal, I believe their net income margin should be easily 20% plus in 2027. 15% I think is pretty darn low, but once again, this is a bear scenario, okay? So with that being said, that is my bear case in regards to PayPal and the PayPal numbers. Now let's go ahead and get into my base case. Base case is the most realistic probability I believe will happen for PayPal over this next several years. Then we'll get a little more fun with my bull case and my ultra bull case, okay? So, in regards to my base case for PayPal stock, this is a scenario where basically the company grows about 8% top line over the coming years. That seems very realistic. I mean, the company, even in a slower environment right now, especially for e-commerce, is growing roughly around 8%, right? So, I think that's a very doable number. I think that's extremely realistic. I don't think that's a stretch at all. Base case, and so basically they're doing about $41 billion of revenues in 2027. Base case assumes PayPal continues to put up solid numbers from PayPal, Venmo, and Braintree. Base case assumes company never has any new game-changing services or products. So that's an amazing thing. I've been doing this number, but without any game-changing services or products, right? And that's where we get into the bull case and ultra bull case. You'll see that I have them doing some much bigger numbers because then we're going to start to assume they launch some big new products that we're not seeing today, right? Now, net income growth, they have been doing about a double up there. They've been doing a little over a double up in regards to kind of their EPS versus their revenues recently. So I don't think that's a crazy imagination there, right? 16% net income growth, putting us at about $7.2 billion of net income in 2027. Net income growth assumes PayPal will continue to find small cost savings in business while remaining disciplined with spending. PayPal has shown it can grow EPS faster than revenues recently, right? Base case assumes AI helps the business make better decisions and helps the business keep overhead under control, which, if you think about PayPal and you think about how AI can help them, it can help them generate more revenue, get people using the app more often, the apps, I should say, right? Help businesses make better decisions with obviously what they're up to and what they're doing. And also it could save PayPal money in terms of their overhead expenses. So as a company grows revenues, right, much more of that money is reaching that bottom line, right? I mean, if you're going to grow, and this is my base case, we're going to grow from about $30 billion of revenue to a little over $40 billion of revenue in a matter of a few years. So that's an extra $10 billion of revenue. We want to make sure much of that revenue is hitting the bottom line, right? Now, something I find fascinating is even in my base case, I still don't have the company get into a 20% plus net income margin, which I really think by 2027, the company should be at a 20% plus net income margin. But I wanted to go more conservative, even with my base case in regards to this one, right? Now, this is where the risk reward gets crazy. Because if PayPal is able to put up 8% top line growth a year and 16% bottom line growth on average per year, the company easily can command a 20 PE, but you can make an argument that it should command likely a 30 to 40 PE, okay? So let's say worst case scenario in my base case, they're commanding a 20 PE. That puts a market capitalization of $144 billion. Guess what? That's over a double up from here. But if you're talking about this type of growth on average, you're going to command a 30 to 40 PE over the coming years, right? Which puts the market capitalization at about $217 billion to $289 billion. This is my base case for PayPal. Base case. We're not talking about my bull case. We're not talking about my ultra bullish case, okay? We're not even talking about the company launches any game-changing products or services. So once again, this gets into the whole risk-reward profile of PayPal and why it's so freaking attractive to me right now to be a buyer of the stock and to be adding as many shares as I possibly can for this next 6 months or so. I mean, every share in freaking sight, give me. Alrighty, base case. Let's go ahead and get into my bull case and my ultra bullish case for PayPal. Things are going to get fun now, okay? So, in regards to my bullish case, keep in mind, my bullish case is still not even crazy. We're doing 10% revenue growth on average over the coming years under my bullish scenario. Under my bullish scenario, okay? So this is where it's like, am I being too conservative? I think that's a fair question. If I only have them doing 10% growth on my bull case, right? So I have them getting to a little over $45 billion, but it's fascinating, right? This is where compounding comes in hand and everything, right? The difference between an 8% growth rate and a 10% growth rate is massive. You're talking about 2027, less than $41 billion of revenue. And in a 10% growth scenario, you're talking about over $45 billion of revenue. That's a huge number, nearly a $5 billion difference there, right? Bull case assumes PayPal continues to put up good numbers from PayPal, Venmo, and Braintree. Bull case assumes company never has any new game-changing services or products. My ultra bullish case might be a little different, okay? Net income growth of about 18% here. So a little less than doubling up my revenue growth here. So that puts us out about $8.3 billion of net income for the company. Now, keep in mind, look at that net income margin for the company. Even in my bullish scenario, I still don't even have them getting a 20% net income margin by 2027. I've looked at my bullish case and I really think I might be too dang conservative here, okay? I'll be honest. Net income growth assumes PayPal will continue to find small cost savings in business while remaining disciplined with spending. PayPal has shown it can grow EPS faster. Bull case assumes AI helps the business make better decisions and helps keep business overhead under control, right? Now, if you're talking about 10% top line on average, 18%, you're commanding a 30 to 40 PE, okay? Bottom line. So that puts us in 2027 at between a $250 billion market cap. Remember, the market cap's $66 billion today. Between $250 billion and $333 billion in 2027, right? Yeah. Talk about a little bit of upside here. Once again, I think a lot of people could look at this bullish case and say this is way too dang conservative for being a bullish case. I mean, base case, okay, but bullish case, not even getting to a 20% net income margin. Alrighty, so my ultra bullish case in regards to PayPal. How crazy are these numbers going to be? Well, let's just see how crazy they're going to be. Let me know what you think. Are my numbers too conservative, too aggressive? I'd love to hear from you guys in the comment section. This is my ultra bullish case for PayPal. I have them doing still a growth rate much under what they've been able to do historically, but I have them basically doing revenue growth on average 14% per year on average. This puts us at over $52 billion of revenue in the year 2027. Ultra bull case assumes PayPal accelerates to older growth rates from PayPal, Venmo, Braintree. Ultra bull case assumes new products and services help revenue growth. That's key, okay? So all this work that they've been doing behind the scenes in R&D, it ends up coming to fruition, and we see that and plays out in a much higher growth rates for the company, right? Ultra bull case assumes Economy will be weaker in 23 through 24, stronger economy in 25 through 27. I have their net income growth coming in at about 23% on average per year. This puts them just under $10 billion of net income in the year 2027. Net income growth assumes much of the same things we kind of saw before, right? Ultra bull case assumes AI helps the business make better decisions and keeps business overhead under control, just maybe to a little bit greater extent. Now, if they're growing these sorts of rates, a 30p is in the bag, likely. On average, a 40p is very, you can talk about a 40p, you can even talk about a 50p, right? In this sort of scenario. Now, once again, look at that net income margin. I still don't even have that net income margin over 20%, even in my ultra bull case. Keep that in mind, folks, okay? And I think it's very possible the company could get to 20% plus, but even in my ultra bullish case, I still didn't even have them at a net income margin of 20%, okay? Might be a little important, something to keep in mind there. Now, 30p on the stock, $295 billion market cap in 2027, $393 billion market cap if we're going to slap a 40p on it, which if you're talking about 14% top line on average, 23% bottom line, in the sort of consistency this business would be putting up, I think a 40p is actually somewhat realistic. That would put us at nearly a $400 billion market cap, and today it is $66 billion, okay? So when you look at my different scenarios I have laid out here, this is where it's basically impossible not to, take PayPal stock pretty dang serious right now. And it's very hard for me not to buy every share in sight for this next 6 months. Could I be wrong? Could the company shrink in the future? It's a possibility, but we've seen no signs of that. If anything, the growth looks like it's about to accelerate, and that's in a very, very tough e-commerce environment we've had for this past year with very, very tough comps on a year-over-year basis, and everything we've kind of been working through here, I think PayPal's looking pretty darn good for the next several years, and I think it has the most attractive risk-reward in the stock market I can find right now. Right now, there's not a better risk-reward profile in terms of me losing money for the next 5 years versus making a lot of money over the next 5 years than PayPal. PayPal is the creme de la creme right now in this market, in my personal opinion. I hope you guys enjoyed today's video. Smash me a thumbs up if you did. I appreciate y'all being here. Thanks for being subscribed as well. Also, I have my hedges, okay, my potential hedges for 2024. First link in the description down there if you want access to see my potential hedges for 2024. Check that out. If you'd like to join my Patreon, let's say you get value out of these videos I produce for you each day and you want to give back, then do so on Patreon. You also get to see the stocks I'm buying, selling, hedge moves I'm making in my Patreon portfolio, everything like that every single week, including I just bought 4 stocks in my Patreon portfolio literally today. So if you want to give back to the channel, plus, obviously be able to see that, plus get access to that Discord chat for the Patreon squad, then check out the pinned comment down there. Much love and have a great day.